Alrighty, folks. Good afternoon. Welcome to another edition of Meme Stonks. Um, Pretty wild day, obviously. Pretty wild day. AMC closing 100% higher today. Obviously, I got out before the weekend. Not too upset about that, considering we already did over 100%, about 160% from where I had entered. The fact that we did another 100% today is, I mean, is pretty mind-boggling. What's more important, I think overall, is that it's similarities to January in that it's not just one. It's just not. It's one thing if everyone gets bands together and the apes strong together meme comes out and everyone buys one thing. It's different when there are multiple stocks out there doing just just insane moves. So if we just go through, we have things like Pets, Triple BY, Bed Bath Beyond, BB, Nikola, Kodak, right? These sort of names, obviously GME. You have things like Rad. If we jump down here to Rad, these kind of things. In relative terms, they all are making significant moves, similar to those gains of 50 to 100%, right? Due to their size, and you start to go down and you start to see more. I added CCIV, for instance, right, to the list. Things like CCIV, these are things that are retail heavy that all of a sudden they become all of a sudden attraction again as soon as everything gets going. Blink making a move, Space continuing its move out of this consolidation, right? It continues. Things like COVID winners like Etsy coming out of its low, things that we've looked for to start to actually put points on, right? Pot stocks continuing to at least show volatility. And so it's a across the board sort of gambit, I would say, because the market itself doesn't care. The market's flat. Market's not doing anything. Why is the market doing anything? Because there's nothing going on, right? Yeah, because it mentions TLRY as well, right? There's nothing else going on in the market right now. We're all waiting for the same thing, which is to see inflation numbers. We're waiting for new catalysts to drive the market and for us to make basically new decisions on top of the problems that we've already solved. And so when we look at the market, there's literally nothing to see. Yeah, I mean, the Dow is really the only thing that has shown a consistent trend. Why is that? Because over these last couple days here, and from the from the long weekend, it's really still just been an energy and banks story, right? We look at energy; these moves are a lot more significant than obviously the whole meme stock phenomenon in terms of a trend and ability to continue to position. But you know, it's hard to make up a story of how energy continues to do well, and how these slower value ideas do well in an atmosphere where retail is able to cherry pick what they want and also buy just about everything and cause prices to soar. I mean, who is it? I mean, is it just a bunch of kids hanging out and dicking around, or is it more to it, right? And I would say there's obviously a lot more to it. And I would say if you're really looking for the answer to why, right, we don't need to know why, right? We don't need to know why gravity exists. We just know how it works, how to use it. We don't need to know why these things happen. But if we really wanted to ask that question to figure it out, I think it's pretty easy to figure out that just because it comes down to the fact that there's really nothing else to do in the market right now. We're already positioned for a certain idea. We're waiting for confirmation. So right now, you know what the best thing to do is? Well, we know retail is coming back in. You might as well just start to get the game going and have some more fun. You know what happened back in January? Well, the same thing. We did the same thing, and guess who profited? The institutions that played the game, right? They had some fun in here, and they were able to obviously take some very big gains. Of course, there's short positions out there. They're playing their own sort of dangerous act. But for something to happen like this here today, it's really important for all of us to understand that it's not a bunch of, it's a meme, but it's not a bunch of memers causing the price to go up. This is a very wide approach by institutions, by everybody, buying together to cause this to happen. And it's who's going to be able to get out first, right? This level of buying is not done by just people on Reddit. I can promise you that. And I think everyone agrees with that, especially when you see it across the board. If it was just one, it'd be a different story. If it was just one, that's different. It's the fact that it's an entire market. I think JJR mentioned like PLTR earlier. These type of things, this is so market wide that everyone's too involved. BGFV, these type of things continue to go. It's too much. Everyone's buying everything. And it's really important for us to realize that that does not really continue, right? We saw what happened in January. If we put it back to GME in January, I think it's important for anyone that, again, don't go into the FOMO mode, but it's hard not to. It's really important to understand how short of a spell this really was back in January and how hurt just about everyone got. I would say it's less than 10% of people that actually profited, right? If you remember, we profited from that very early entry down in here with the breakouts, right? We were playing breakouts down here and played the first breakout here. And we were very careful to get in and out. We would get in, we'd get out, and then we'd get in and get out, right? And then we were done. Right when it sort of reached a climax. Now, I got out of AMC, like I talked about right before the weekend, saying that this is kind of the climax. It is similar because we see it now, right? It doesn't matter if it goes up another 100%. It's getting out is the problem. How do you get out of this position? If you have options, good luck. Now it's the problem is that with options, no one's going to buy them. And what happens when the underlying value goes down to 100% right here? They're worthless, right? Because you have a value that's not intrinsic anymore, and there's no reason to go buy, let's say, calls at 40 in a month from now. No one wants to buy AMC at 40 if it's not going to be at 40 in that month, right? And so it's important for us to have fun and enjoy this moment. I think it's so much fun to have the energy with everything going on. It creates more dynamics and it allows for us to find things that are not really there all the time, right? When we know that. So if we go to the rationale of I talked about triple BY here, how much slower it was comparatively. Now it wasn't doing anything. And so what we wanted to do was look for something was at a low that would be able to generate that momentum in a similar way, right? That's what we did here today, right? This is sort of the culmination of everything. That's a very technical approach and a lot of fun to do that, but don't you think that's about it? There's not much more you can do here, right? And so it's again important that this is one thing and has nothing to do with our overall strategy. Because right now, there's fucking nothing going on. There is literally nothing happening. It's going to be a little while before we get any more economic data. We do have Powell speaking at the end of the week, but there's really nothing going to be happening for a long time. And I think the market's going to show you that we're going to play this game for a little bit, but this is going to be sideways. And so it's important that we stay positioned correctly. We don't put too many eggs in that basket. So, for instance, right now I'm still 90% value, right? So Banks Energy really leading the way still. Obviously, a lot of REITs in there doing well. Everything on the infrastructure side, things with commodities, right? If we take a look at gold again, looking through this trend that's continued. I can remove this now. We did not consolidate. We've continued to trend. This is from back in here. We talked about this break, and this is a lot of points, guys, right? It's really important to remember what we're doing here. These are consistent sort of plays that have continued to grow and that we've been looking at, and you don't need to do anything. All of these other trades take a lot of effort and work, and they're random in their own sort of chaotic way, and you're not going to be able to pinpoint timing, and it's frustrating. It's a lot of fun, but it's not how you consistently make money over time. We're trying to be consistent, right? And so right now it's important we continue to trade through these things that, you know, are giving a consistent trend and do not get sort of the something's happening in this moment and it's going to go away sort of feel, right? That's not the case with this value sort of idea. So again, when we talk about a percentage risk management, it's important that you're not playing too much with these and you don't get too emotional and attached to things. It's really easy for all of us here to get attached to a stock or a ticker, and that's where the whole chasing dogs mentality comes from, right? Where you want to continue to be a part of it. And you're like, well, you know what? And even months from now, right? All of you here have a ticker, like just like I do, where even though something happened months ago, we're still thinking about it. We're like, oh, well, you know what? It's getting at a pretty low point. We're ready. And every time it goes up 1%, 2% a day, you're like, oh, well, this is definitely the time, right? And it's just that over sort of, you're not even being critical, you're right. You're just being emotional and thinking about it like, oh, this is mine. This is going to definitely work, right? And that's really the wrong time to be doing it right now, right? With things that are happening now, it's not that they're unexplainable, but they are very easy to fall into the trap that this is going to continue when we know that's not the case, right? We know it will continue, right? I'm going to mention a few other things that are important that are volatile, but they are in a different circumstance. We've talked a lot about travel for quite a bit of time. Sorry for the siren or something. I got my window open. I don't know if you guys hear that. Hopefully not. We've talked about travel for a long time, and it's important to see now how this has changed from a very short-term volatile situation to during this volatility of retail playing the game and the market trading sideways. This travel site has started to really form a trend that's very easy to sort of move with, right? We don't have to do very much here. If you look at the points, obviously in relation today, they put a lot more points on, but it's the trend that matters here. The higher lows every sort of week that we've been seeing every day consistently. This here is at its basically breaking point. If you look across, we have basically a local high, and this comes back to the highs from before COVID, right? And if you break through there, now you're on a whole new sort of trend, right? It's either today, or excuse me, either tomorrow or the day after, really going into the weekend, that it looks like we're going to be at that point. I thought this was pretty quick. The fact that we sort of attacked our way to the high, even during all this going on, I think it's something that it's really easy to forget about. It's very important that you're part of this sort of trade here, and we've talked about it through a lot of different facets, things like CCL as well, right? We were talking about it down here. I put the new sort of targets on there. If you think about a trajectory, there's a lot of points there to gain very quickly. Things like win still, right? When you think about the actual points that can be put on here, even if the trend just continued, it's significant, right? Um, and so I still see that this area, in terms of volatility, but being a part of value is probably the best place for risk right now still. And so we continue to look for risk there. I'm sure all of you got involved with some of the fun stuff here in the last 2 days. But I mean, overall, uh, I think everyone can agree that you're probably not going to go buy up here. It's just how do you do it, right? How do you do it? There's not really a way to do it anymore, right? And so continue to look for those others that will somehow ride off the volatility, but they're a part of a better story for us, right? uh, if we pull it back to just sort of the overall uh, situation of what people are looking for, right? I think we are still definitely in this portfolio, not rotation mode, right? It's not rotation, but this portfolio building mode. And so when we talk about the idea of being in value or growth, I do still see that there's a lot of that transfer from wanting some sort of bond situation in equities, which is dividend focused. And so when you look at the overall sort of, let's say, percent flow of that bond sort of sense in that value side of money, which is basically the biggest size of a chunk, the mutual funds, the different pensions, everything that is a part of this sort of long-term investing. If you look, SPY-D, for instance, the high dividend fund that I've talked about, even just looking at this chart that I'm a part of, it's at all-time high. And now it's really easy to be like, well, this is barely any points. But it's important to still note that the most money is being put into the dividend and sort of long-term sort of approach right now. And an overall very balanced approach on equities, which again shows that there's not one individual area that's being sort of overbought. And that's where we get into that mentality again, where it's like, well, if these things are being overbought, they're going to come down. Maybe on the meme stocks, right? Meme stocks are one thing. But when we look, this whole value thing, and with this dividend focus, trying to use some sort of hedge in the equity market, it's not even close to being bought too much, right? We're really just sort of testing the start of it by continuing to do these pretty nice consolidations, right, leading into new highs. We did not reach the all-time high as quick as we thought we would on the overall market, right? When we look, right, at like something like the SPY here, we sort of figured we would be traveling through all-time highs here. We actually got a little bit knocked down trading flat here, right? We wouldn't be trading flat right now in this area if we actually climbed through all-time high, right? We would just be climbing through the trend. And this is a different situation, but we still see that things on the more defensive side are traveling through all-time high, right? things like the Dow again are still trending; they're not all-time high. It's important to still see that in that yes, the market's not moving, but there is a lot of money still coming in. Obviously, the meme stocks, we can try to create a number there. Is there money really entering the market for that? I have no idea. It's probably just been in the market. It's coming from crypto, right? But it's important again that as we travel through highs, even if it takes a longer time, that we're not discounting to the future just because it's not moving as fast right now, right? It's very easy for the points to get put on quick if we know the money's here. Money's here, right? Money's here, and so let's just enough of that. Let's come over here to sort of a broader and at this point, I don't think anyone really knows sort of question. You can say that this consolidation on Bitcoin is healthy. You can say that. But you can also say that this is the first time we've ever had this long of a consolidation at a low, in that it's not bouncing back, in that most of that money is being spent in the equity market right now. Now, one of two things could happen based on the equity move is that, well, first of all, everyone sold Bitcoin and now the money's in equities. And maybe they'll just sell all the money that's in equities with the meme stocks and put it back in Bitcoin. And then they'll come right back up. The other one is that everyone sees how much easier it is to make money in the equity market. And so you know what you do? You sell the rest of the Bitcoin right here. And this would be a lot more bearish of a move. You have a downtrend into a consolidation, which coming out of a downtrend should lead to another downtrend, right? You copy these lines over just like we do every time. And then that's going to be your new downtrend. If that's the case, then we have a lot more money to come into the meme move, right? And that could be very interesting, very fun. The question though is it all retail that sold through here, or was it institutions? And is there even any retail left to really be a part of that move, right? That's a question that I don't think anyone really knows, and I don't think anyone knows what's happening here. The important takeaway is that there's still no way to go buy this. There's no way you can get me to go buy this here. Even if it breaks out to the upside, there's nothing here that tells me that I should go buy this right now, right? Especially when we're having all of this sort of saucy action in the equity market, right? If that stuff starts to come down, that's the exact, opposite reason why I should be going to buy Bitcoin, right? Is that now there's volatility in meme stocks, so now I should be entering something that's even more volatile. That's not a good plan, right? And so the more you start to look, the more you start to realize that, okay, there's so many flashy, cool, and opportunities, all these different things. Things are at lows. We have things at really high peaks, doubling in value in a day. But it's just bullshit, right? It's just bullshit. None of it is really, none of it's tangible in any way, right? Because there is no answer to any of these things. You're flipping a coin, but then you're trying to bet on it. And so you're betting on someone else, bet on whether it's going to be heads or tails. None of these situations lead to good endings. None of them are happy endings. I don't want to really get involved too much with really any of these things, and I think it's again important that it can be a little boring, but it's probably better to be boring right now than to be too chaotic, right? And getting too involved. And so when we start to look at everything, even Bitcoin being where it is and looking a little bit healthier, consolidating, I don't think the problems go away, right? And so even when we look there, I'll still take the gold trade over Bitcoin right now. And so keep that in mind as well, because it is going to pop up where there's success in these meme stock plays in equity, and it's going to carry over to crypto again, and we're going to see it probably bounce back and forth. We saw it with January, right? Back in January, that's when the whole NFT craze started happening as well with crypto. That's when Ethereum really got going. All these things really started to get connected, and they're still very connected, but people are bored. People are just bored and tired, and I don't think there's really much more. What's important again is the economy. That's literally the most important thing. But guess what? We're not going to know about that for quite some time. It's literally in 2022. And so what we do is we carry on with our positions. They're trending up very well. Everything is very much on the uptrend and bullish. We continue, right? We don't go to bite on any of the bait right now, right? We don't want to ruin our positions. So you want to stick with your positions, transition when you can, right? And we continue. There's nothing else there, even though it's a little sideways right now. We had a long weekend. Things were kind of weird yesterday because we opened high and sort of just sold from there. Today is wild. it's not the overall, right? It's not going to dictate what happens in a week from now, 2 weeks from now. Let's just sit and watch and see what happens. Um, and there's nothing else, right? There's literally nothing else. If you take a look at a lot of the things I've posted, I put a big list out from yesterday. Obviously, I was like dying last night, and so they're not all there. Uh, but there are some interesting ideas, and a lot of these are updates from things that we looked before. Uh, Keep in mind that some of these again have that lag effect. For instance, the triple BY chart that I posted just the week prior, a lot of those have that lag effect that we do see some of these charts popping off now. Some of these will have that effect where they'll start to come up later, and it may not be specifically for the same reason. And so keep in mind just some of those, and I also put some updates in there on charts. And also, it's important in this moment to understand the volatility and the nature of it. So there's a lot of charts that I've looked at that I'm very bullish on that took like a 6% dive or something today, right? Or some of them over like since yesterday, right? And they've taken like a 5% pullback. If that is within still the pattern that we were looking at, it's important that we're aware of those opportunities that are actually buy opportunities. We've gotten so used to just buying on uptrends and things continue to the upside. Don't forget what it means to buy on a discount at a low, right? It's really hard to switch gears like that. But a lot of things right now are going to be in a position. Think of it back to the travel trade when we'd buy at those lows. Those were they were pretty little. They were a little dangerous down there, buying at a low. But we knew overall that there was something there to be buying on. And again, the timing's never going to be perfect. It's just about being aware of everything and you're seeing it, right? And so looking at as much as possible, I think, is very important. Today obviously showed that if you looked at the whoever was looking at the most tickers and saw the momentum getting going, you were able to attack and really take advantage, right? And so it's going to be important to realize that even things that got pegged down a leg, those might be the ones that really snap back the most because of this volatility. So don't forget about them. Just like some of these charts that were just at fucking lows, right? And now they're going to all-time highs for no reason, right? No reason, but if you saw it happening, you'd be able to get involved, right? Are you in Ether? Not anymore. So not anymore. I was doing it when we were doing all the NFT stuff, and then that's when I changed my mind on Bitcoin that one night because it just got a little too much, right? There's too many reasons to not be involved, and obviously then we started crashing. But I do prefer the Ether model because of the derivative part. I think that the way the fee structure works, and then how everything on the NFT side is based on Ethereum, it's basically a derivative. When we look at options in the equity market, the stocks, we know that options basically dictate stock market's moves in a lot of different ways, especially when it comes towards expirations. How you translate that to crypto with Ethereum, I'm not really sure, but we do see that when there's more NFT buying, the fees go up, and then Ethereum goes up along with it, right? And that sort of dictates its speed. And I think that's a better, stronger model than just having one straight up, right, flat Bitcoin crypto, right? There's nothing else to it. That's it. People just it's just a Ponzi, right? Which is fine. Nothing wrong with it. But we know it's not used to spend anything. At least with Ethereum, you're spending it on things, right? So maybe I'll get back involved again. That's why I was looking at the consolidation right now. It's like, I'm not. There's nothing. I don't think there's anything to be done right now. I think it's gonna take a long time, and we have to really get past the regulation part, which was always a worry. But it's the way it's being handled, which is the grimy part. It's not that we're getting regulation against it. It's that this looming idea of environmentalism and shit like that, which is completely true. But then obviously like the backers of crypto who are saying no, it's completely fine. Like these things don't add up, right? And so it's just kind of a little too muddy right now. So we'll see. I would definitely love to see all of that snap back and have no problem. But for right now, it's probably not the best to take too much energy thinking about it, right? Or spending money on it. By the way, that shit was expensive anyway. So uh, I think the best way to do it would be through different derivative products than just buying the straight up. You have a lot more protection. It's like buying options. We have a lot more protection with options than just owning the stock, even though it doesn't move as much. We have a lot more downside protection because the dynamic of basically betting on speed, price, and time. You have multiple facets, multiple problems that are being solved or need to be solved, that you have an advantage as opposed to just one to one buyer and a seller, right? Those don't fit into models, so they're just, well, do you think this is worth more than it is? Oh, okay. You don't really get that opportunity though when you go sell something straight up, right? All right, folks. I don't think I have much else to say. It is a little bit slower. It is hard to gauge what else we need to really focus on, and that's why it's important we focus on what we've already looked at. And so definitely going into tomorrow and into the end of the week. I mean, we have, I would say, a very interesting end of the week coming up with digesting what the hell is going on these last 2 days. Look back to January. You want to know what happens? Just look back at January. You think it's going to be different? Then go ahead, bet something different. There's a reason why. There's institutions out there that are shorting and buying long, and they're going to win on both sides, right? Because it's not that difficult to understand that going short on these big moves to the upside by meme stocks while also being long on them, and it doesn't it doesn't take much, right? It doesn't take much for it to stop, right? Look back at January if you want to find out. I'm sure it's going to look exactly the same. The numbers are going to be different, percents will be different, but the story will be the same. And it's really about figuring out what the hell is going to happen after that. We don't have that answer yet, so all we can do is watch price. No, none of our opinions matter in this situation. Whatever you think doesn't matter. Whatever I think doesn't matter. It's what price does, and we react accordingly, right? So if the market does something, then we just trust the price there, unless there's actually obviously something there that we can somehow take advantage of being it wrong in the wrong, or it's the wrong price at a certain time. We believe it's going to change. Those are different stories. This one, let's watch it, see what happens. I'll see you guys in the morning. Find out what happens this last 2 days here. And good luck. Good luck with your meme stocks if you're in them. Apes stay strong. There's astronauts up there. We're going to go get them. And if not, then don't do any of that shit because that's a dumb idea, right? Get out when you can. I'll see you guys in the morning. Sell the meme stocks, guys. You stop it. Stop it up right now. Don't buy any in the morning, okay? See you guys.